All right, my name is Stephen Allen. I am regional manager with Victoria Finance. The area really that I cover is going to be the southeast of the United States. We have folks that are in Georgia, Tennessee, Alabama, some folks in Florida. It's really a very diverse area. I've been doing this now for over 20 years, and what I've learned is that there are so many things that are evolving daily in this industry. And what I see is a lot of realtors struggle to adapt to some of these changes. And so what we're going to go through today is just talking about things that maybe you know, maybe you don't know about this industry. But a lot of the stuff is what we see and what we actually see realtors struggle with on a day-to-day basis. And so hopefully this is going to help you in learning from my experience what can help make your job easier as you're out there pounding the streets day in and day out. All right, so here is the other piece that we really need to talk about. There are so many things in a mortgage transaction that you, realtors, may not be aware of that can kill the deal. So when you're working with your clients, the first thing that you're asking yourself is, hey, I need a pre-approval letter. Yeah, that matters. You've got to start with a pre-approval letter. That's like literally trying to get married before you even go on the first date. You don't know if you're compatible. So you need to make sure that if you're working with your clients, a pre-approval letter, yeah, that's important, but pre-approval letter doesn't solve everything. There is a lot there that you need to be aware of that could actually throw that transaction off. And so when I say that transaction, I'm talking about the mortgage experience. Let's say that you've got that pre-approval letter, and this could be with John Doe, the lender that you just swear up and down is better than sliced bread. They're amazing. But yet there's always that little surprise that comes up. So what are those surprises and how can we better mitigate these issues to make your job easier? Because the last thing that we want to do is see your commission or your sale go down the tubes because something surprised us and we messed up. So let me give you a list of things that we commonly see, and then we'll talk about how we can better address that on the front end to prevent these issues from becoming true issues moving forward. So number one, what we see a lot of is, those things called afterpay or Zelle payments or all kinds of these quick, easy, pay later type deals. So what's nice about those is that it makes it convenient for consumers to pay for larger items. What's bad about that is it's not on credit reports. So normally when we're running pre-approvals, we pull credit reports. We don't necessarily do a deep dive into all your assets at that time. That's something that typically happens as the underwriter digs into that particular loan file. And so when you start pulling bank statements and you start seeing afterpay payments, or you start seeing Zelle payments, or you start seeing all these other different payments, you're going to find that there's a lot of question marks that can bring up. So why is that? That's showing that there's undisclosed debt that is still out there that could impact that transaction. So many people don't think about that, especially realtors. They don't think about that because we're looking at the pre-approval letter. My lender, who I love, issued this pre-approval letter. We're good, right? Not always. So how we fix that is have better conversations with them. Your lender specifically also have a conversation with them. Let them know about this. You're hearing about this because you care enough about your education to do better in your career. These are things that you can take away from today's lesson to help you to grow and be better as an agent that works with your clients on a day in and day out basis. If you can help a client who's already packed up half of their home and their home is sitting in a U-Haul because they thought they were getting this home because the lender pre-approved them, but in the end, guess what happened? They forgot about the afterpay that totally messed up their approval. That's a very uncomfortable situation, especially for you as a realtor. So this is meant to help you be better in these situations to prevent that type of mess from happening, because it is a mess when we have to deal with that. That's the first thing I would tell you. The afterpays, those things are a big factor. Something else that's big is secretive debts. So secretive debts or, things that are just not shared with their loved ones or their partners or whoever is going on that loan with them, that can really throw things off. You've got this person. I had a story one time that I had a guy who went to Vegas, and Vegas will actually let you do credit cards. If you want to, you can do a line of advance off your credit card. And so they went and they actually advanced $10,000 off a credit card. Well, they did not tell their spouse about that because the spouse didn't think about it, and it come up in the refinance. And so what I'm trying to say here is that sometimes these little surprises like debts that the other doesn't know about may throw that transaction off. So how do you prevent that? It's all about having a good conversation. And I think this conversation is not necessarily with your client per se, but it's making sure that you talk to your lender. Of course, you should talk to a lender that's going to be thinking outside the box. It's not just about what's on the credit report. It's more than that. It's about having that conversation to know what's out there. Because if you don't know, and it's at the end of the transaction when everything's about ready to close and everyone's packed up, and that's when this is being found out, realtors, this is going to kill your reputation because you now are being put into a position to where something surprised you when we should have known about it in the beginning. So it starts with conversation. Like everything, the answer is always going to be communication and conversation. Another piece that you're going to need to see here that I really think is a really forgotten piece as a realtor, it's looking at the entirety of your picture. So when I say the entirety of your picture, you've got so many different facets of income that are coming out. In addition to that, you have so many different facets of outgoing money that's also coming out. Someone who may be thinking about their income, but maybe they forgot to mention that they have a wife from 4 years ago that they're paying child support to, but they don't think about it because it comes out automatically from their check every time they're paid. So it's out of sight, out of mind. If the lender is not doing their due diligence in requesting pay stubs during that pre-approval process to see if there is any outgoing money on the pay stubs, specifically alimony, specifically child support, maybe there's garnishments, that's something that's going to come out of your pay stub. But if we don't know about it, because a lot of people have these things that happened 5 years ago, never think about it again. But as a realtor, this is something that's key. So how do we do these things? Again, this sounds redundant, but it's really this simple. Communicate with your lenders, communicate with your clients, find out about these things because that's going to be about the top 3 items that I see ruin your deals all the time. Doesn't matter if it's Pennsylvania, Florida, Alabama. The players of the game might change, but the stories remain the same. These things exist all the time where people get into the transaction, they think they're good, they think that everything is okay, and then the surprises happen. We've got to be able to take out those surprises, and it starts with better communication.